actually not theory, but actually what works in our professional and personal lives. Friends, my name is Ajay Vadva, and I am a freelance trainer settled in Delhi NCR, into training for last 7 years and with almost 3 decades of industry experience. We meet every Saturday from 10 to 11 in the morning, online via Zoom, and we are also live on LinkedIn. Every episode brings a new speaker, a new topic, and an interactive segment, live coaching or a quiz, because learning sticks when you experience it. We are active on LinkedIn, Instagram, and Facebook. The links are shared in the chat box. You'll also find our website and WhatsApp community link here. Do stay connected so you never miss any update. Friends, let me start with a question. How many of you have thought, I earn well, but where is my money going? What if I don't work till 60 or I don't want to work? And above all, can I actually become financially independent? For many professionals, work stress is not just about working hours or workload, it's about financial uncertainty and lack of options. That is why today's topic is so relevant. FIRE, financial independence, retire early, which we all want. This is not about quitting your job tomorrow. It's about building career, building clarity, I must say, discipline and choice. So work becomes a decision and not a compulsion. To help us understand this realistically and responsibly, I now hand over the session to Ms. Archana. Thank you.
Thank you so much, Mr. Ajay, for a beautiful introduction.
Yeah.
And now let me introduce the speaker for the day. Yes. So let me introduce the speaker for the day. Mr. Subhash UN is a certified financial planner and the founder of Sun Training Academy. He works closely with professionals and families to help them build structured financial plans, develop disciplined money habits, and move towards long term financial independence with confidence. His approach focuses on clarity over hype and process over shortcuts, which makes today's conversation especially valuable. We're delighted to have him with us today. Welcome, Mr. Subhash. All the participants, please type welcome, Mr. Subhash, in the chat screen to welcome him. Please type welcome in the chat screen. Welcome, Mr. Subhash, in the chat screen. Welcome, Guruji. Okay, that's nice. I guess one of your students here. Good. So thank you so much for all the good introduction, all of you. So thank you so much for taking out your time from your schedule, Mr. Subhash. It's really appreciated. I have been following to all the participants. Let me introduce you. Let me inform you. I have been following up with him from almost 3 months now. So it's nice to have you here finally.
Sure. Thank you, Archana. Thanks for the invite.
Pleasure is all ours. So can we start now with the introduction? With the introduction.
Yes, already.
Cool. All right. So here's the first thing which I would like to know from you. Many people they misunderstand fire, or in fact, they would have even heard of this word for the first time. That is, we misunderstand it as sorry, we misunderstand it as retiring early, okay, or else stop working early. From your experience, what does financial independence it actually means, and how different is it from just simply retiring early?
Okay. So there are two parts to this question. Let me answer independently. So when you're talking about financial independence, Archana, predominantly, if you look at, we're all in the rat race. Okay, be it somebody who's employed in the corporate world, or be it somebody who was a business owner. Now, if you're looking at the majority of our time we spend, be it our blood or sweat, whatever you call it, is towards earning money, generating income. And why do you want to do that? It's because we want to have a certain kind of a lifestyle that we want to enjoy, right? And how long will this go? A point of time will come wherein you say that, "Arey yaar, enough is enough. Now I want to know, relax. I want to take a setback. Okay, so predominantly at some stage in life, we all understand that the income is going to drop or it is going to stop. Okay, but our lifestyle is going to continue. Our expenses are going to continue perennially. Okay, we started spending from the day we were born, even before we were born, and the expenses will continue till we breathe our last. Sometimes even after that. Okay, if you are so loved one, the expenses are going to continue from the next generation for you, right? When they remember you doing all the ceremonies. The point is, there is always going to be a mismatch between the earning phase of an individual and the spending phase of an individual. And if you are looking at, because of a lot of medical advancement, the spending phase is going to increase. That's the longevity risk. People are living for a much longer period of time. Recently, we had somebody in India who passed away at the age of 120 plus. Okay. So, if you look at the spending phase is going to increase also because people want to retire early. Not by choice, even by force sometimes. Okay, so gone are those days when people used to say that I am going to plan to work till 60 because my company allows me to work till 60 or 58. Okay, but today that may not be the reality. And if I'm looking at a lot of them in the current scenario, they want to probably learn or study for a much longer period of time, pursuing their masters and stuff like that. So they may start earning little later. So the earning phase is shrinking, the spending phase is increasing. So there's a very clear mismatch of this. So if you do not plan to probably invest properly and build up a certain corpus, we may not have financial security. So financial independence is about having enough money so that there is no pressure on your mind that I need to work. Otherwise, how am I going to take care of my lifestyle? So typically what we call this is a stage in life where you have sufficient assets that create a passive income to take care of your expenses. So active income will come for some point of time, but at some point in time, you will say that enough is enough. I'm not going to work anymore for money. Let my money work for me. So when you start generating passive income sufficiently enough to take care of your lifestyle expenses, you can say that probably I have financially retired or I have achieved financial independence. Okay, so that's the tipping point. Second, when you asked a question about retiring early, this FIRE is a very, very beautiful acronym. It's been running in the social media for quite some time, but in the recent past, a couple of them have been telling me that, sir, as long as it is not forced into retirement early, I'm okay. Okay, so if you are not fired from a job and you have planned your exit in a beautiful manner, then it is fine. So in the current scenario, I see a lot of them. You might have definitely seen this in the media that certain companies are laying off big time. The point over here is a lot of them, especially in the IT segment, those who come and meet me, when I ask them when you want to retire, they say that I want to retire at 45. So I ask them, what do you want to do here at 45? He says, I really don't know, sir, but I am not too sure whether I'll be employable, okay, in the sector in which I am operating. So probably I need to look at something else. I really don't know what I'm going to do post that. But he wants to plan an exit much before 50s. So typically, if I'm looking at, there is a fear factor, there is an uncertainty factor. So what is predominantly required over there is some kind of a planning. So that planning is what makes it FIRE. Okay, where you plan for your exit much early from an active life.
That's true. Thank you so much for the beautiful insights, Mr. Subhash. It's wonderful. In fact, just like how you said, I also want to state this that many people they have in fact texted me saying that I find it very difficult to go ahead and invest. I cannot take off 5,000 or 10,000 from my income. It's very difficult. My entire income is going away in this loan, this EMI, etc. So we all are in this assumption or deduction, whatever I leave it to deduction, whatever I leave it to you. We always believe, many of us always believe that we need a high salary to achieve FIRE. In reality, how much does financial discipline and lifestyle choices also matter compared to income?
See, if I'm looking at the income, people have varied kind of income. People earn in thousands, people earn in lakhs, people also earn in crores. And all of them retire successfully
Yes,
or have problems. Okay,
that's
so there are problems at different scale depending on the scale of your income and the scale of your expenses.
okay.
Somebody also has no financial worries. You may not say so. Okay, and even thousands of salary people have financial worries. The point over here is how do you look at it? So it's all a question of discipline. So let me give you an example, Archana. Okay, let's say you see a bottle over here, and bottle has got some water and it is also half empty. Now I want to fill it fully with water, but there is a hole beneath. Now, how do I do that? How do I achieve? I want to fill water completely, but the bottle has a hole beneath.
Hmm.
How do I achieve this? How do I fill it with water fully? Probably
Probably,
somebody
yes,
in the participants also can share your answer on the chat box. Let's see if we get some interesting insights from anybody there.
yes. You can even put a message in the chat box.
So Archana, what will you do?
The first thing is, of course, use a cello tape or whatsoever and do it. Second thing is empty the bottle into a clean one.
Very nice. So you either plug the hole, option one, or option two, you say you will change the bottle. Is that what you said?
Correct. Yes, I
So you
said
will
that.
change the bottle. Okay. Anything else? Let's look at the chat box. What somebody is saying.
Okay,
Multiple
take the
filling points.
bottle and turn it upside down.
Okay. Fill the bottle. Very good. Okay. So Kritika says fill the bottle and then turn it upside down so that the hole goes up and you don't have any water leakage. Okay.
That's
Somebody says
nice.
that's very interesting idea. Okay. So Ajay was saying multiple filling points. So maybe you would like to ensure if somebody is from the science background, they will say the force with which the water comes in should be greater than the force with which it goes out. So you have different ways of looking at it. See, when you're talking about the water coming in the bottle and the going out, typically in financial terms, what I mean is the one which is coming in is your income. What is going out is your expense. In certain cases, yes, you can plug the hole, right? But can I completely stop spending money? It is not possible. It is not possible. There are going to be certain expenses. So can I be a little careful about my spending pattern? Somebody said turn the bottle upside down. Very nice, beautiful. So typically a common man, what he does is that as soon as he earns an income, he will take care of your current expenses. The expenses are gone. Whatever is left, he is now wondering how do I invest with this little money that I've got. Probably turn it down, change the habit, keep some money aside for savings, and what is left, try to live within that. Okay, that is another way of looking at it. Third, have multiple filling points. Ajayji, what you said, probably look at some alternative income source. Maybe you will have to diversify not only your portfolio with respect to investments. Can I diversify income source? Can I have some side gigs? Can I have multiple incomes coming into me? Can I use my time wisely to have multiple incomes? Somebody also said the rate at which the water comes in should be greater. So probably can I look at means of increasing my income with currently whatever I'm earning? Can I upskill myself so that with a better skill I have better possibility of earning in a corporate world? Maybe I need to shift my job, shift my profile, or can I relook at my spending pattern? So there are multiple ways. There is no one single answer to this, Archana. It purely depends on a person's lifestyle, person's abilities, and the mindset. So the point over here is discipline is what is going to be the master that is going to help you with that. So if you have discipline, anything can be achieved in life. So the most important thing that you need to do is first have a plan of action. When you're talking about income and expense, it's about budgeting it appropriately. Nobody is saying that don't spend. Okay, the point is be wary of where you're spending, how much you're spending. So break up your expenses into discretionary and non-discretionary expenses. There are certain things which you cannot have a control on. Let us say you have a child and he is very talented. He is going for some tuition class, swimming class, dance class. You cannot go and say, no, I'm not going to send you on that. Okay, it's very important. So those are non-discretionary, non-compromisable. Maybe your rent, somebody would say that it is non-compromisable. But then if you are probably feeling that you're paying too much, maybe relocate to some other better venue or better home. Or probably if you're looking at dining out, yeah, I'm not saying that don't dine out at all, always cook at home. No, probably you have a budget. Probably I'm going to spend about 1,000 rupees or 2,000 rupees for a month. Or one time I go out, I'm going to spend only this. So depending on that, you will choose a restaurant that you go. Number of times you're going to dine out. So it's about frugal living. Frugal living does not mean that living like a miser. It is about being careful about where you're spending and how much you're spending. So that discipline of spending is what is going to help as the first building block towards your financial independence and retirement early. So most of them who are looking at achieving FIRE need to first have a control on your expenses. Second, maximize your savings and invest prudently so that you beat inflation. Inflation is a white elephant. And your expenses are going to increase. You like it or not, the reason why you expect a higher income to come, so the same reason your expenses are going to go up, which is inflation. So you need to invest prudently to beat inflation hands down. So only when you do that, probably you will be on your marks towards achieving your financial independence.
That's absolutely right, Subhash sir. So sorry, I'm handling 500 things here side by side, so I'm very much distracted, but I'm listening to you. Absolutely right. Your discipline plays a very good role in the lifestyle choices which you have. Here is one thing which I would like to add, which also came up here when you were giving an introduction. Many of them, they're like, let me not introduce now, let me not invest now, let me do it later, let me do it later. In fact, I myself took close to 5 years before starting investing, and I started with hardly 500 rupees because I got tired. I was like, oh my God, it is going forever and ever. It's been 5 years and I keep thinking, let me start next month, let me start next month, but it's not happening. Let me start with whatever I have. And that's how I started with nothing but 500 rupees. And that's how I'm going forward for this question right now. We often hear that let us start planning later. From a fire perspective, when is actually the right time to start planning for financial independence?
Okay, I remember when you are asking this question, I remember a particular client. He is coming to my mind now. When I met him, he wanted to plan for his retirement, the same question that we had. So when I asked him, the first question I asked him, ideally, when would you love to retire? He said, sir, I would love to retire tomorrow itself. Then I said, you should have given me a call at least about 10 years ago, then it could have happened. There is possibility it could have happened. So everybody, wants to retire on the same day when we are meeting, when we are having a discussion. If
True.
I would probably use the example of Warren Buffett, in an interview, Warren Buffett, if you have heard about this name, very, very great guy,
Yes.
very prudent investor. One person who created a lot of wealth through prudent investment is this guy, Warren Buffett. They asked him if he has got any regret in his life. If he has got any regret in his life.
Mm.
Okay. So Warren Buffett said, I have only one regret in my life. You know
Mm.
what is that? He said, I started investing at the age of 11. I started late.
Yes.
He said, I started late at the age of 11. Okay. He was doing errands as a newspaper boy. With whatever little bit he was earning out of this income, he was buying stocks. You may not be prudent in picking up the right stocks, but you can definitely be prudent in keeping some money aside towards your investment. So, what is the best time, if you ask me, Archana, to start your investment? It was yesterday. The next best time is today. Today is a very good day, 3rd of January, good Muhurtam. So you can start your investment journey even today if you have not done so. Yeah.
That's correct. All the participants, please type now if you think that earlier is better, and type later if you feel that you will do it later or timing matters more. Please type in the chat screen now if you are going to start it today or you think that earlier is better. Please type now or type later. Let me hear some responses from all of you.
The biggest block in your achievement of financial independence in retiring early is procrastination. That's the biggest block.
Correct, correct. That's absolutely right. My personal experience, I can tell you for this. Biggest block is always the main thought, the financial block, that let us do it later, procrastination. Absolutely correct. Now that we're talking regarding blocks, let me hear something from you on this aspect as well. Okay. It sounds aspirational, but it doesn't start with big investments or quitting jobs, just like how we were speaking right now. It starts with few basic discipline or financial goals, right? So, from your experience, what are the first two or three financial foundations someone must put in place to realistically begin working towards fire? So, before we thinking about returns or early retirement, what is the uh, how can we put in place to realistic begin towards working fire? What are the financial blocks which we need to remove?
See, the first thing that you need to do is have a proper budgeting in place so that you know where the money is going. Make a list of all your expenses. Okay. Let me tell you, it will be very startling to you. I asked the client when I was doing this discussion, I asked them, how much do you spend on average every month? Both of them are looking at each other. The husband and wife did not know what to answer. They said, Subhash sir, maybe just put 50,000 rupees. I said, just like that, I cannot put something, boss. Okay, you need to give me a breakup of where is this money going. So I gave them a small Excel sheet. I said, break it down. You may not have it right away, but no issues. Over the next 3 months, start listing down where is the money going. So what are the various expenses? And then after 3 months, we will have a discussion. What I would suggest is every week when you list it down, both of you put your mind and say, okay, was this discretionary or non-discretionary? Could I have done something about probably managing it in a better way? So after about 2 months or so, when I met them, they said, Subhashji, it was very useful exercise. And to probably give you an idea, they were spending something like about 90,000 Archana. They thought they
Yes.
were spending 50,000, but the expenses were 90,000. So I asked them, what is your learning? out of this entire exercise? They said, yes, sir, two things. One, we have got an idea where we can probably have some controls. And we have a plan of action now to bring it down to 70,000. That is possible. We feel that is definitely possible. And second, he said, sir, if I'm spending so much and I really don't know, I was not aware of it, that means I'm earning well, na? That's a positive way of looking at it.
Earning
But,
well.
yeah, or I don't even know that I'm spending 90,000. I've been thinking I've been spending 50,000. So it is not pinched to me yet. But the point over here is that if you are not really aware where is the money going, if you are not even aware that there is a hole underneath, you may not have the water when you want. Right. So the point over here is first thing it starts with proper budgeting. Have a budget in place of where how much money you are going to spend this month and allocate it appropriately and see if you can have proper control measures. It's about living frugally, not living miserly. That's the first point. Second, have a proper habit of investing. I'll ask you this question, Archana. Every day you work towards earning money, yes or no? Somewhere or other, your thought process, your efforts, your labor, your mind is working on how can I generate more income, correct? You are also spending money on a daily basis.
Yes.
So if you are trying to earn every day, you are spending every day, are you investing every day?
Investing is not every day, correct.
Okay, so we should also start building a habit of investing every day. No? How long you will keep working for earning money? So at some point in time, if the money has to work for you, you need to set aside the money. Correct or not? So that is very, very important habit. So start investing right away with whatever the little. It is not about the amount. It is about the discipline. It is about starting early. It is about starting early and driving slowly. Even if you are earning lesser interest returns or whatever, but still this habit of investing will help you in the compounding business. Okay, so compounding is your biggest friend if you're talking about it. The other major myth people have is about loans. When people talk about loans, they say that I want to clear it off very soon. That is one extreme. The other extreme is that for every damn thing they want to buy an iPhone also, they will want to go for a loan. So it is about prudently using loans properly, that there are certain good loans, there are certain bad loans. So take the loans when it is required. Probably it is for asset creation. Asset creation, what I mean is maybe your home is an asset. Yourself, when you're spending money on educating, upskilling yourself, that is an asset. So when you're doing, when you're taking loan for these kind of asset purchases, then it does not have a problem. As long as interest rate is well within a range that you can tolerate that. So that's a very, very important thing. And use your credit cards also wisely. It is not about using it, exploiting it, at the same time not using it all. You also need to know how to use a credit. Okay. And third important thing is when you're talking about investment, you should have some kind of a discipline. There are a lot of investment avenues today which are not investments, they're all scams. So you should not fall prey for it because of your greed. Okay, so if you are careful not to lose money, that itself is a process of making money. Okay, so
For
that
them,
is,
it's the process of making money.
yeah. So as long as you don't lose out, you will win. No, so don't lose out for all kind of scams. That's very very critical. So that is something that you need to work on. So those are the three building blocks. And fourth important thing is have a contingency account. See, there are, especially in the current corporate world, there are a lot of risks of people losing jobs. So that should not stress you out. So have some kind of a contingency account that you build up for taking care of your regular expenses, so that your mind is also calm and have some peace. So that contingency account is also critical for you as a backup. Okay. So if you do that, you are on the way towards your financial independence.
That's true. Thank you so much, Mrs. Subhash. Now, to all the participants, let me tell you two things. Point number one, giving you a heads up towards the end of the session, I would be requesting you all to turn on your video so that we can take a small pic with our speaker here. And this will be also used on social media. So, really request you all to please be prepared for that. Point number two, the chat screen is open for all the other participants. Please feel free to drop your questions in the chat box. Otherwise, 5 minutes down the lane, I'm going to open the chat. I'm going to unmute you for the participants' questions. This time we are actually going faster. I usually make sure that only around 10:40 or 45 we let the participants ask any questions. But I can understand from the number of people who have joined in also, they have 500 questions for you, Subhash sir. So sorry for bombarding you with it right now, but I'm pretty sure questions are going to come in from all the other participants. So feel free to use the chat box. Otherwise, please wait for another 5 minutes before I unmute you. Okay. So now coming to the last question, as you said very rightfully, the mindset, the thought also plays a very crucial role. It's not about the amount which we are putting into the investment, but it's also about the staying disciplined. In fact, I give an example which I had started towards the beginning. I started with nothing but 500 rupees. Just 2 years down the lane, I started saving 7,000 per month. Saving as in investing, not saving. I started investing 7,000 per month, starting with just 500. And that's when I, just like how you said, Warren Buffett's thought, that also came to my mind. I was like, oh my God, I wasted 5 years. Okay, now coming back to this question which comes across. So, what do you think is the biggest mindset shift professionals they must make when seriously committing to financial independence? What is the biggest mindset shift?
The biggest mindset shift is all in the mind, Archana. Okay, first of all, see, when you're talking about financial independence and retirement early, have you ever gone for a vacation?
Yes, very less. But yeah.
Have you ever probably said that, okay, today morning I get up, I will take luggage and then go to the railway station. Whichever train comes, whichever destination goes, I will go like a blind date. I will go for a blind holiday.
I've done that once, but not morning, at night.
At the night. You have gone and when you are talking about this vacation, let us say you are not packed adequately with some woolen clothing, and then you landed up in Kodaikanal in a very freezing temperature. Did you
No,
enjoy
I
it?
have of course not done that.
So that can happen, right? So the point over here is when you're talking about financial independence and retirement early, the first stage is to start planning for it. So when you're talking about planning for it, the first mindset that is required is take the help of a proper professional who can do that. So the only difference between any retirement and the financial independence and retirement early is the plan. So you need to have a plan of action. I need to understand how much is the money that I will need at the time of retirement. It may be a few crores. Don't get startled by the figures. You can definitely achieve it with discipline. So you should have a ballpark figure that you need to achieve at the time of retirement. And when do you want to ideally retire? When you're talking about ideal retirement, it is about financial retirement. It is not about physical retirement. I would say never ever retire. In your mind, be very clear. Okay, idle mind is devil's workshop, right? So you should do something. Be active in your life, doing something to give back to the society maybe, but that may not be with an objective of earning an income. It is with an objective of keeping your mind and body agile. Okay, so when you're talking about financial independence, the next important thing is about upskilling on a regular basis. In life, when we were all kids, people told that you should study well. Why? So that you can get good marks. Why? So that you can get good college admission or a job. Why? So that you can earn well. After that, what? Nobody told us. Nobody has ever taught us what to do with the money that we earn. So money skills are very, very, very critical in life. Okay, be it in whatever field that you are, all of us are working towards earning money. Nobody is ever teaching us what to do with the money. We either copy our relatives, we copy our siblings, we copy our neighbors or our friends. Okay, but what is suitable for him or her is not going to be suitable for me. It is my life, it is my money. So you need to build your own money habits. So for that, you should upskill yourself. So you should spend some time on getting some knowledge about managing money, managing portfolios, managing investments. How do you need to look at it? There are enough course and content available on the free domain through YouTube and so many other things. But then you need to have some common sense approach, which is the most uncommon thing. So have a common sense approach about how are you going to look at your retirement. Third, very, very important thing is live a little frugal life. Okay. Be a little careful about where your money is going. Don't try to ape somebody else's financial habits. That's not going to work. Okay. Fourth, it is a very, very tight rope between balancing today and tomorrow. Don't live your today so lavishly that tomorrow is at stake. Don't live so frugally that everything you want to enjoy tomorrow and then you're not enjoying your present today. That will definitely take a toll on your mind. Most importantly, take care of your health, because health is going to be at a point in time in life going to be the biggest drainer of your financial wealth. So I would always say it is like an auto. Have you ever gone on an auto? There are three wheels in an auto. And if all the three wheels are having the right tire pressure, then the ride will be smooth. Otherwise, it will be horse ride. Right? So the three wheels in our life is financial health, emotional health, and physical health. You need to take care of all the three of them. If there is an imbalance in even one of them, the other two will drain. So at whatever age you are, you need to focus on your mental health. You need to focus on your physical health as well. Only then your financial health will be protected. Okay. So this is a lot to do with your mindset. And finally, when you're starting investment, it is not always about the best investment product which is giving the highest return. Nothing like that. Okay. They will keep changing. So you need to diversify across. Let us say you like sweets, Archana. I'm telling you, I love sweets. I have sweet tooth. Okay. So you are inviting me for a lunch and you are going to serve me with 20 different varieties of sweets. Do you think I will love it then?
No, of course, then you would.
Obviously, no, right? So I need to have a variety. A feast is when you have all the 6 different tastes. So when you're talking about your portfolio that you're going to create through your investments, you should have a mixture of everything. Somebody should be very conservative so that there is a safety element. Something should be a little higher risk element so that you have a growth beating inflation. So diversify your investment across various asset classes. You may not do it right away because you may not have the knowledge that is required to. Maybe take help of professional, maybe learn more about it and then start doing it. Okay, so you need to diversify your investment so that you have a mix of everything, all the 6 different tastes that God has given in your tongue as a taste buds. All of them have to be activated. Only then you can enjoy a feast. That is how your portfolio also should be built.
That's true. Two things. Point number one, I did hear from you a long time earlier itself that you take classes and you train people. That is showing up right now the way that you are explaining so well. And it the question, even if it is serious, the way that you handle it and bring in a small essence of humor in between, that's very nice. I really appreciate that. Point number two, just like how you said earlier, you said Mr. Warren Buffett, the same quoting again, I would like to state it's not just I started a little bit late. Same thing. I right now I would like to add. He says that don't put all your eggs in one basket. So put in into lots of other things, not just everything in the same mutual funds, not everything into the same in equity whatsoever. Thank you so much for that. Okay, now to all the participants, two things which I had stated initially. Point number one, please be prepared to turn on your video towards the end of the session. Point number two, right now during this phase, I usually go for a live coaching scenario, but let me change the twist a little bit. Let me leave this mic open for the participants who are here. If in case you have any questions, please raise your hands or drop your question in the chat box. We would be happy to answer it right now. Let's go for probably 2 or 3 questions. Is that fine, Mr. Subhash?
Yes, absolutely fine.
Okay. Please either raise your hands or drop your message in the chat box. Either raise your hands or drop your message in the chat box. We'll unmute you from our end.
Archana,
Yes,
can
please.
I help you with one small example?
Yes,
Okay,
please go ahead.
if you're okay. Probably I will just give you a small idea about how you can start your retirement journey early. Okay, so let me
Sure.
just take as an example. Anybody over here can volunteer, or maybe I can take you also as a volunteer. Okay, that if that is okay with you. Let's say just to give you an idea about how easy it is. It's not at all a rocket science that when you're talking about retirement planning. Uh, Give me a if you are okay, Archana, if you are okay to share about your personal data, you can do that.
Sure.
Just to give you a sample picture about how we can plan, what is your current age?
Please, I need to calculate. I'm not going to hide it. 36.
Right. And ideally, when would love to retire?
Uh, 60 should be fine.
60 should be fine. And let's say, okay, how long the money should last? At least for another 30 more years, keeping longevity risk in mind. Okay, so at least for 30 more years, the money should last. If we are talking about retiring today, and you need a bare minimum living expenses to take care of yourself and your family. The children are taken care, they're all on their own, the parents, in-laws are all taken care. So you need to take care of only yourself and your spouse. If that be the case, what is the bare minimum monthly expenses that you would have?
50,000.
50,000. Okay. Let's say assuming, see this I am only giving you as a sample to work on. Okay, nothing holy about these numbers. So if you are talking about at the age of 36 with a 50,000 monthly expense at an inflation say about 7% age, your expenses will be about 2.5 lakhs at the age of 60 actually. Okay. And if you need this kind of a money to last till another 30 more years, then probably you need to have about 7 crores of retirement corpus when you retire at the age of 60.
Wow.
If you are talking about building 7 crores at the age of 60, then are there any contributors towards this? Let us say you have some other investments and all that. Let us assume, just for example's sake, you have nothing. You are going to start from scratch now. Okay, you are going to start from scratch now to build up a 7 crore corpus. Then you need to invest something like about 32,000 rupees in an investment that can generate about 12% average returns. And every year when your income goes up, increase your investments. Can you give me a ballpark figure of how much you expect the income to grow on an annual basis?
Or ballpark would be close to 10% actually.
So if your income is going up by 10% and entire 10% growth you bring on your investments also, you need to start with something about 21,000. If you start with 21,000 rupees investment now, every month, keep aside so that 7 crores can be built by the age of 60. Keep in mind, every year when your income goes up, increase your investment. You may say that, boss, 10% income growth hua, I may not exactly translate, but at least half of it I will translate towards investment. Okay. If that be the case, then you need to start with about 32,000 rupees if you increase your investment by 5%. This is just to give you a ballpark figure. Okay. The reason I am showing this to you is this is a very easy way of planning. I can go much more in depth about it. I just want to give you a sample. It is not a rocket science. It is not about the returns. It is about the discipline and consistency that is going to help you build your retirement corpus. So don't be startled with 7 crores. Arey yaar, when I did this to my client, one of my clients, he said, sir, I have not even seen 1 crore in my life. You are talking about 7 crores. I said, yeah, 7 crores is required at the age of 60. Building the first crore is always a tough part. Even for me, it has happened. Building the first crore took years. But after building the first crore, the next crore came earlier. The next crore came faster. Okay, that would happen. That is where compounding will start working towards you when you start seeing the results. Okay, it is like the man-eater tasting the blood. You will get sucked into it. Okay, that's the beauty about this investment game.
True.
Over to any of the questions from the participants.
Yes. So now waiting for some questions from the participants. Please feel free to use the chat box or else please raise your hand so that we can unmute you.
So somebody asked in the chat box that I can see, can we buy gold ETF instead of physical gold and FOF of mutual fund? Yes, as long as gold is a part of your investment plan, you want to build your portfolio with a bit of gold, then gold ETFs are recommended. And if you have a demat account, yes. If you do not have a demat account, for the sake of buying gold ETF, don't waste your money. Your gold mutual funds like what you have put over there, FOF mutual fund will help. Physical gold is recommended if you probably want to accumulate gold for consumption in a home. Let's say I have a daughter, she's turned 18. I expect at any point in time, in another 5 or 6 years, I need to have enough gold for her marriage requirements. Then I may start building physical gold for her. I may not probably choose a digital route. Okay. So depending on whether you have physical consumption need in the family or it is purely from an investment perspective, you can look at physical gold. Physical gold good for consumption. Digital mode of gold ETF or gold mutual funds good for investment purposes. Okay. Ajay Wadwaji is asking what the difference between saving and investment. So Ajay, if you earn 100 rupees, you take care of your immediate expenses. Let's say 60 rupees is spent. 40 rupees what is not spent is saving. Surplus. Disposable income. Okay. What are you going to do with 40? That is your investment. You may put it in a share or a bond or FD or RD or gold or maybe any other kind of investments in mutual funds. What you do with what is left, 40, that is what we call as investment. So saving is income minus expense, whereas investment is channelizing the savings productively.
Just to add to what you explained right now, to the participants still waiting for questions coming from you, most financial planners suggest invest for long term, not for short term.
How much is long term? Okay, I'll tell you a small story of a friend of mine who had gone to Ahmedabad. If you know about Ahmedabad, it is a trading hub in India. Okay, so he asked this question about long term and short term to the audience over there who are all investors. This is on 2007, and the answer that he got is, if I buy today and sell it tomorrow or day after, it is short term. If I buy in the beginning of the month and sell it by the end of the month, ek mahine mein, then it is a longer term. This is the answer in 2007. 1 day to 1 week is short term. 1 month plus is long term. Fast forward to 2009 when he had visited Ahmedabad again and asked this question to the audience who are all investors. The answer was very different. They said, sir, if I buy in my lifetime, I enjoy the fruits of my investment in my lifetime. That is short term. If I invest, my children and my grandchildren enjoy it. That is longer term. What happened in 2007, 8, 9? is the kind of market movements that people saw, which was historically not seen by the Indian investors, and that changed the entire mindset. So the point over here about the short term, long term, it is very unique to every individual. But typically, if as a common answer, as a ballpark figure, I had to give anything between 1 year to 3 years is short term, anything between say 7 years plus is longer term, is what ideally a definition wise, if I have to give, I would say. The reason also putting 7 years plus is you look at any business that would have a swing, there will be an up and down. But over a 7 year period, okay, things will normalize and it will become sustainable. That's the reason when we say longer term, it's about 7 years plus.
Okay, thank you so much. So, since we do not have much more questions coming in right now, participants, anybody else who has okay, so Gokul has one question.
How do we adapt when our expenses increase as all the prices for goods are increasing? You are right, all the price of goods are increasing what we are looking at consuming. There are certain goods whose prices are not increasing. Just for example sake, I'm saying, you're talking about idli. You're talking about having an idli. Idli is available at 10 rupees also. Idli is available at 500 rupees also. It depends on where you want to go and have it. You have a phone available at 10,000 also. You have a phone available at 2 lakhs also. It is about what kind of phone that you want to show it to others that you are owning. Okay, very often I also do have an iPhone, Archana, but somehow I am not too comfortable using it, so I don't take it out. My friend always complains, why are you not using iPhone? I said, I don't feel like using. See, it's about personal choices. Okay, so there is nothing like, you cannot have a control. There are certain things, even if I'm talking about school fees, okay, it is possible, but whether you want to compromise on that or not. So it is always those who are married people over here, whoever you are, you will definitely hear this word a lot in life called as compromise. So it is about what compromises are you willing to do with your current lifestyle that would help you in your future lifestyle.
That's true. Okay, so anybody else who has any question? Shall we go quickly for the live coaching? It's an important part of our event. Okay, so frugality is a must for life. Wouldn't this
200%.
okay, depends on which level of frugality.
You need to be frugal.
We need to be. So where our focus to do whether controlling our expenses or focus to generate more income.
Both are essential. It is like asking whether your right eye is important or left eye is important. Both are important.
Okay, so now to all the other participants, we'll start with the live coaching scenario. So here's the difference to the participants who are joining a talk show for the first time. Let me inform you, quite a good number of talk shows are there in which there's an interaction between the speaker and the host. However, our talk show is different because we also go for not just interaction with the participants, but we go for live coaching segment. What's the point of listening to him speak for 35 minutes, 40 minutes, when towards the end we do not have any understanding of it or we do not have any application of it? So what I'm going to do right now is I'm just going to put forward certain questions, a quiz as you can say it, along with the options A, B, C, D as well. So I really request all the other participants to please type your response. Which do you think is going to be the best one among the four options? So here is the first one. Your income has increased, but savings have not. So what is the best fire aligned response? A, increase, the options have gone up. Increase spending to match income, delay investing until income stabilizes, fix a savings percentage before spending, or ignore savings temporarily. What do you think is the best one? A, B, C, or D? Option 3, okay, fix the savings percentage. Amarjit says option B, delay investing until income stabilizes. Okay. Option C again from Saranya. Raj also says option B. Ashwini says option C. Maybe I have the response already from Mr. Subhash's mind, which we are going for. But yes, absolutely right. Past record of how much years should be studied. If you want to invest in mutual fund or SIP, 1 to 3 years, most portfolios. Oh my goodness, the best learner here come from Mr. Ajay here and Subhash sir. Okay, yes. The correct answer, according to me, here is going to be option C. That is the third option. So you keep a percentage of spending allowed always. So maybe if your income is not increasing, then you can go for a savings percentage always. So here is the second one which we are going for. You invest only when you have surplus. So many people do that. We invest only if we have surplus. So what do you think we should be doing in a scenario like this? You wait for bonuses. What should be the change? Wait for bonuses, invest occasionally, automate investments, or follow market trends. What do you think should be doing? You invest only when you have surplus. What should change? Option D, follow market trends. Okay, so lots of research required there. Option C by Saranya. Uh, LIC Saranan says option C. Gaurav says option D. Naveed says option C. Augustine says option D. So I think I put forward a very beautiful question right now because we're getting multiple responses, not just about the right answer. Everybody has a different mindset. Absolutely right. Everybody has a different mindset. Everybody has a different understanding of this also. So if we are investing only if we have surplus, you can go for either B or C is what I would suggest. Invest occasionally. Sometimes I have had expenses a lot. So what I have done is that out of the blue, I ended up having around 25,000 rupees extra. I immediately called up my financial advisor. And what he said is, okay, fine, Archana, you give me 25,000. We'll put it into tax saving. Forget it for the next 3 years. 3 years later, we can see how 25,000 is increasing. So that was one thing which he had suggested. Of course, apart from that, automate investments, I am running for that as well. So every month on the 5th, I have an amount which is going out separately every month. So whether it is small or big, doesn't matter. I've also automated my investments. What do you suggest for this, Subhash? If I can leave the screen open for you as well.
You should automate your investments.
Okay. If we have surplus, then automate investments is the best one.
Yeah.
Okay. All right. So thank you so much for here as well, Mr. Subhash. Now going for the next question. Sorry for the cold cough, everyone. Friends, upgrade lifestyles, travel more, and spend more. So, what do you think supports fire best? Putting forward the question again in the chat screen. Friends, upgrade your lifestyles, travel more, and spend more. What supports fire best? Match their lifestyle, avoid all spending, spend intentionally, or ignore planning. We are going to one more response from the previous question itself. He is saying automating expenses and going with the market trend should go hand in hand, right? What do you say for this?
When you're talking about market trend, I assume they are talking about the stock market index movements. Okay. In Tamil, there is a saying, Kalla kanda naya kana, naya kanda kalla kana. I love dogs. Okay, anyway, the point over here is when you have the best investment opportunity is when the markets are down. That's when the fear is the highest. Most of us will not have money at that time. Okay, I've seen this. See, I've been in the market for 23 years, Archana. Whenever there is a fantastic investment opportunity and the markets are down, the fear was the highest. People did not want to invest. And whenever I asked, people said that, no, I don't have money. And when the market was at the peak, everybody has money to invest, which is not actually the very good time to invest. So the point is, nobody can time the market. The markets are like that, going up and down. Okay, so the best thing is invest in every market. Market is up, market is down, whatever be scenario, nobody can time it, including Warren Buffett. So keeping on investing is what is in our control. Market is not in our control. Neither Modi or Trump or Warren Buffett can control the market. So why are you trying to do that? Forget it.
Okay, cool. That's a nice thought as well. Okay, now this one I think we do not have any concepts here. Everybody is going for any confusions here. Everybody is going for option C. Absolutely, spend intentionally. Diversify the risk according to mitigate risk. Yes, of course. Now, going for the next question. Planning fire feels overwhelming. What is the best first step? First step. You quit your job or you learn everything at once. You get a structured plan or you avoid the topic. What do you think should be the rest one? Option A, B, C, or D?
Archana, C is your favorite alphabet. Huh?
I'm so sorry. While preparing the questions, I didn't think of that. Next time I'll do that. Have a structured plan. And Mr. Subhash is always available for discussions on this aspect of having a structured plan, just like he did on the spot for me right now. So please feel free to reach out to me. You have in the Zoom background as well what he's doing, how you can reach out to him. Subhash, so may I know if you're there on LinkedIn or if you have any ways of reaching?
I have LinkedIn, but I am always available on the phone. That is the best way to reach me out.
Okay, all right. So now, coming forward for the last aspect, which I said. So I'm very happy that the participants have interacted with me over the chat screen. And I'm very happy that your a few questions also came apart from just the questions from my end. Now I really request all the other participants to please be aware that just point number one, towards the end, which we are coming in just 5 minutes down the lane, I would be requesting you all to turn on the video so that we can take a short pic with the speaker here. And now, Miss Ashwini, are you there in the call so that we can go for a vote of thanks? I'm sorry, I'm unable to see you due to the number of participants here. If you could raise your hands, it would be wonderful. Okay, Ashwini Meghe. Yes, I've unmuted you. Actually, I've unmuted you, but I'm unable to hear you. We'll wait for a few seconds. No, we still cannot hear you. Yeah, can you now? No, we cannot. I'm so sorry. There are a few settings wrong here then. Okay, so I would like to thank the session on behalf of Ms. Ashwini. So sorry, I would have loved to given the opportunity to you, but maybe the mic is not supporting. Really sorry for that. I apologize for that. So now coming towards the end. So towards the end, let me tell you that we are also going for a session of HR series specifically. So confidence communique for the HR series is what we are going to go for. And in the chat screen, I'm going to put forward the details of the registration link for the same. Please feel free to either register for the event or go ahead and share it with your friends, your HR friends or your colleagues who would be loving to come to the session as a speaker or as a participant. That would be wonderful. So I put across in the chat screen the registration link for the HR series, the links for all the other previous sessions, sorry, links for all the other social media links that is also there in the chat screen. Otherwise, towards the end, I'll post it again for all of you. Let me post it now itself, not a problem. So let me post it now. Sorry, working on multiple screens, so my face is like going left and right and everything. Okay, now to the other participants, may I please request you to turn on your video so that we can take a short pic with our speaker for the day. Okay, anybody else who can turn on the video? Anybody who can turn on the video? Everybody is shying away from the videos, is it? Okay, so we have one here. Oh, Sundaram sir, hello sir, how are you? Okay, so we have one more. Gaurav has also turned on the video. Oh, we have quite a good number of people. Everybody was already prepared this time, I guess. Quite a good number of people. Okay, so I guess that's all. Anybody else who is pending? Nope. Yes, this is the level of number of people whom we have here. Thank you so much, everyone. So on the count of three, I'm going to take a pic. And if you have any LinkedIn IDs to share, please feel free to use the chat screen and go ahead and post it. So at the count of three, ready, everyone? One, two, and three. Done. Perfect. So I've put across in the chat screen the message which I have taken right now. Sorry, the screenshot which I have taken right now. I've sent it in the chat screen. Feel free to download it. To all the other participants, let me inform you that this is a series which happens on every Saturday, 10 a.m. to 11 a.m. It's by default. Please join our community. Please follow us on Instagram, YouTube, Facebook, and the YouTube, sorry, the WhatsApp link is not sent. Okay, give me just 1 second so I can send the WhatsApp link. Please join our community because it would be beneficial for me to send the links every time. Otherwise, I have to send individually to all of you, which becomes a little bit difficult. Please join our community and I would be able to send you the messages, send you the details of the link always. Let me just send the community link. Yes, so it's here in the chat screen. Please join our community. Please join only in the announcement section. If you are available, please feel free to join the group section as well. But the groups will be open for all to interact. The community is between me only to the for the posting. So the unmute option, you wouldn't have to worry regarding that. So now let me take the time to thank our speaker for the day. Subhas sir, thank you so much for coming for the session. It's really appreciable that you took out time from your schedule. I know you're very much occupied, but somehow my 3 months of follow-up paid off. Yes, and very happy to have you here in the session. It was a very beautiful session. It was very interactive, and not to forget, it was very useful, very insightful as well. Any participants who would like to express their thanks in words to in by unmuting himself and speak, feel free to do that. Otherwise, please type in the chat screen. Thank you, Mr. Kumar sir, and we'll wind up with the session.
Thank you.
Anybody?
Thank you, Sarvana.
Please type thank you, Mr. Subhash sir, for taking his for him to take out his time. Okay, Praveen says thank you. Sarvanan says thank you. Praveen Kumar puts across yeah, the link. Okay, thank you so much. You have a question, Amarjeet sir? Okay, so he's also saying thank you. And Ashwini says thank you for such a beautiful session. Augustine also says thank you, Subhash. Hello, Augustine. Thank you so much for joining. Okay. So thank you so much, everyone, for the session. And the next coming Saturday, I'll inform you the details of the session again. If you have joined the community, you will get the details of the coming Saturday session. Who is it going to be? And the timing is always fixed at 10 a.m. to 11 a.m. So please feel free to join the WhatsApp community. Join it that via that so they can get the details of the upcoming link. But it is by default every Saturday, 10 a.m. to 11 a.m. We have the session online via Zoom, and we also go live. Thank you so much, Subhash, for your time.
Thank you, Archana. Take care.
Okay.
Thank you all. Pleasure meeting you all. Yeah.
Ending the meeting now.